going to share a little bit of what Exfinia's history is. As Gabriela mentioned, I moved to the US in 1997. And in 2015, we founded Exfinia because we saw the need of helping not only international clients, but also helping domestic clients. Now we have grown. We have our headquarters here in Houston, but we cannot only have business in the US, we also have representation in Mexico, in Colombia, Venezuela, Chile, Argentina, and in Spain. What are our services? Well, we offer several services. We can help clients with their retirement plannings. We can even help them to establish a lifetime income. We can help them with college savings. We can do planning for business owners. We can help them with their retirement plans for their employees. We can help them with buy-sell agreements between partners, of course, with their personal finances. And then when they grew their business and they want to sell it or transfer it to the next generation, we can help them with that as well. We do a lot of strategies with life insurance because of the tax benefits that these instruments have. And a lot of our insurance services are in order to provide the client a solid financial plan that is going to get accomplished regardless of what happens. So life insurance is a very important part of that. As well, disability insurance, we need to protect our income because that is what is going to get us to our financial goals. We also need to have long-term care insurance. Usually we pair that with the life insurance, but it's very important that we have that protection as well because of the high cost of medical expenses here in the US. A lot of our clients require international health insurance because they have business in different countries and they want to be covered here in the US and also in the countries that they travel. When a client doesn't have an international health insurance, we need to make sure that they have travel insurance when they are in other countries. And then we can also help them with short-term financial instruments that are backed by real estate. When we are doing a financial plan, we need to take a look at everything, every aspect that will affect your finances. First, we need to start by the foundation. We need to have a solid foundation that is going to allow you to fulfill your plan regardless of what happened. Imagine if a person comes to us and they give us their goals, we prepare a plan, and that person is very organized, saving what they need to be saving. But what if something happens, something totally out of their control? For example, an accident, a long-term illness, or a premature death. It doesn't matter how perfect or how exact the plan was. If something happened that interrupted those savings, well, the plan is not going to get accomplished. So while we are in the accumulation phase, we must have protection. In case something happens, that protection is going to fill that gap and the financial plan is going to get accomplished. So we believe that we don't only need to have a simple life insurance policy, we also need to have living benefits, protection in case of a chronic, critical, or terminal illness. Because if we think in pure financial terms, it's way more devastating a long-term illness than a premature death. Because we don't only lose the income of that person, on top of that, we have high medical expenses. So we must have that protection. Once that protection and that solid foundation is established, then we will go and analyze debt. We all have debt, but there's good debt and not very good. So we take a look at the interest rates and we analyze what debt needs to be paid as quickly as possible What debt is convenient that you keep paying as it is scheduled? Because sometimes there are ways to put that money to work more efficiently by investing it instead of prepaying the debt. So we need to optimize the debt, because if we don't, that is what could drain the saving capability of our clients. Then we will go to build an emergency fund. We need to have liquidity in case of something unforeseen happen. And once these three have been established, then we can go to medium and long-term goals to have a complete financial plan. But we don't believe in focusing only in the investment strategy if we don't know first if the person is properly protected, if they are managing their debt accordingly, and if they have liquidity in case of an emergency. When we are talking to prospects, we always ask them constantly to ask these 4 questions to their money, regardless of where the money is invested. The money could be invested in real estate, in the market, in a bank account, in a business, or in a combination of everything. We always need to be asking ourselves if the money is growing, because we know if we have the money sitting in the bank, we could be losing acquisition value. We are losing acquisition capability because of inflation. The second question is our money safe? Can we lose money? Do we have market risk? A lot of the people don't know that there are instruments that can participate in the upside of the market, but not on the downside. When the market goes down, simply we stay stable, but we already captured the gains of the previous years. We never go down to where we started or below. We just stay there. And when the market starts performing again, from here, we're going to continue to go up. So if we can make our money to grow in this staircase shape, is way more efficient than having the yo-yo effect of the market, because recovering from a loss could take time and effort. And it's very important that we are reviewing that plan and that we are adjusting the risk as we get closer to retirement, because we cannot invest the same way in our 50s or in our 60s, the same way that we were investing in our 20s or 30s. Third question that we should be asking to our money: in which tax strategy is my money invested? We know that taxes play a very important role in our savings. Let's talk a little bit about taxes. There are 3 ways to invest according to taxes. The first category is everything that we have liquid. This money, because we can access it at any time, we are paying taxes every year on the growth of that money. That's the price that we pay for liquidity. Yes, we need to have money in this category, but only the absolute necessary to cover our monthly expenses and our emergency fund. All the money that we want for medium and long-term growth needs to be in the second and third category. The second category are all the retirement plans. All of them have exactly the same tax treatment. Since we do not or should not touch this money until we are 59 and a half or older, right now we don't pay taxes. The money grows without paying taxes. But when we are going to start our retirement and we are going to start the distributions, we're going to pay taxes on everything. The money we put in was all the growth. The third category are the tax advantage products. In this category, the money that we save, it's money that already paid taxes. And therefore, if we follow the IRS rules, this money can grow tax-free and we can withdraw the money tax-free as well. This money is more efficient. So each category has advantages and has limitations. Our job is to do an analysis and tell you exactly how much you should be investing in each of the categories to make sure that your money is growing efficiently. Let's look at an example. It's a very simplified one. These are 3 people. All of them are doing the same thing. They are saving $5,000 per year. They do it for 30 years at a 10% return, and everyone is paying 28% in tax. So the 3 scenarios are identical. The first person invested in the first category, in the taxable one. Since every year that person was paying taxes, well, at the end, he was left with $38,000 per year for his retirement years. The second person invested in a tax-deferred plan. Since he only paid taxes at the end, he was left with $65,000 per year. The third person that invested in the tax advantage products, since this person paid taxes initially, he won't have to pay taxes when he withdraws the money, and he will not have to pay taxes on the growth of that money either. So he's going to be left with $90,000 per year. So what is the message that we want to deliver here? It's not only important to save, it's important to save in the correct tax strategy to make sure our money is growing efficiently. These 3 people did exactly the same thing, and they got very different results. So this is the third question we should be asking to our money. In which tax category is my money invested? And the fourth question is, do I have the proper protection to make sure that my financial plan is solid, strong, is going to get accomplished no matter what happens? So what is our process when we are doing a complete financial analysis? Sometimes people come to us that they have nothing implemented, and we help them to implement their strategies. Sometimes people come with different accounts already established. And what we analyze is what's working efficiently. And that money, those accounts, we don't need to touch. We will only make a recommendation if with this new strategy, we're going to get them to their goals in a more efficient way. So we gather financial information, we analyze it, and we develop a strategy. We share that strategy with the clients, and if they would like, we implement those strategies, and every year we are following up with them. We make sure that we are on track, or we analyze what adjustments need to be made, because a financial plan is always dynamic. Many things could change. A new child, a new property, a new job, a new business, etc. So it's very important that we are reviewing every year. So what are the benefits of working with Exfinia? Well, first of all, we are independent. So we have access to about 65% of the financial industry. Why 65% and why not 100%? Because we only deal with companies that have ratings of A+, and above. We don't deal with smaller companies or not companies that are not financially strong. So that's a big, big peace of mind for our clients. And they know that we are going to find what the best option for them is. There's a lot of transparency. The client will never give $1 to Exfinia. The money is invested directly from the client's account into these financial institutions. Most of them have been in business over 100 years. The client has access to their account online. They receive their statements. They have access to the 800 numbers of the financial companies. Exfinia is only the brain that puts the plan together and is giving them the service every year, so they don't need to be calling 5 different 800 numbers to see who's answering the phone. The client doesn't have to pay us. The providers that we represent, they are the ones that compensate us, because we are the ones bringing the client and we are the ones giving them the service every year or as they need it. We have a fiduciary responsibility. What does that mean? That means that we are obligated by the licenses that we have to always put the interest of the client first. So that's another big peace of mind for the clients, knowing that we are always going to act in their best interest. And we are licensed and regulated, of course, here in the US. So this is our contact information. Feel free to contact us, make an appointment, and we will be very happy to help you. Thank you for your attention, and we'll stay connected.